Hello, in this video, I'd like to talk about the business integration with accounting and cost management. In first week, we reviewed the function of accounting with a focus on the differences between financial accounting and managerial accounting. I want to point out here first, even we talk about the differences of financial accounting and managerial accounting, in the actual business operations, they are not segregated systems. They actually are integrated with the other business functions in the same business information system. They are all based upon data collection from analyzing the transactions, reporting the transactions, and share data with each other. So in this part, I'd like to use an example from the SAP Integrated Business Process Open Lecture, which I attended over the winter break. Here we have an example of a typical manufacturer company is a bike industry. We can see the different colors here represent different business functions, the key business functions. Like the orange here is the human resources, the business processes or activities. The purple represent the procurement, or you can say supply chain management. The black one is the production process, manufacture process. Then the gray one, because the company also offers services to the customers related to the bike sales and some accessories. And then we can see the accounting functions. We have two lines of accounting functions. The light green represents the financial accounting procedures, or is like summarized the financial accounting functions. And then the dark gray represents the managerial accounting functions. But in SAP, they labeled managerial accounting as controlling. I want to focus on here is you can see all of the other business functions. They input the data in different ways and in different time points into the financial accounting system or into the overall accounting system. For example, the human resources will offer the payroll data, like compensation into the financial accounting that will become our payroll expenses and compensation expenses. So in the integrated business system, not the accountants determines like the timesheets or the payroll for the employees. Is actually the data initially prepared by the payroll services, and we accept and take them into the accounting system with confirmation. And then if you see the procurement, right, the purchasing functions of the business, they help the company acquire different type of assets, materials, capital assets, and even services. So with the procurement, we add assets into the financial accounting system. That will be the inventory assets or capital assets in the balance sheet. In the meantime, we need to make payments, so that will affect the monetary resources of the company. And for sales function, which the color, we have the blue. And you can see there is a connection between the blue and the black, means the combination of the sales and the production. Because the sales function, they receive the products completed by the manufacturer department and then deliver to the customers. So once the sales function deliver the products from the production to the customers, then we recognize the sales revenue with the invoicing and also recognize the cost of goods sold. Because when we sell the products consume resources of the company by direct material, direct labor, and all of the overhead costs. So sales data, cost data entered by the consumption, the execution of the sales transactions. And similarly, when we offer service to the customers, you have invoicing, right? So you have service revenues, but also you will incur different type of service cost. So the transaction data entered into the accounting system initially affecting like the general ledgers, and it will prepare the financial statements, but help the financial accountants prepare the external financial statements, income statement, or the balance sheet. But now, in the meantime, you can see the managerial accounting or the controlling in SAP are receiving data. I add these two lines to indicate there is a data flow from the financial accounting system to the managerial accounting system. So managerial accounting doesn't hold a separate data system, or they operate independently from other business or accounting functions. So they receive data from financial accounting, and they may also collect the data directly from other functions, and then with a focus to internal users. So we can prepare cost reports for the products or service, perform variances analysis, right? So we can do the profitability analysis, cost analysis, prepare the budgets, and a bunch of other typical managerial accounting report to the internal users to assist decision making. So I think as a executive, like managers, is very important or key to understand, so comprehensive, to have a overall picture of all of your business functions and how they are linked or connected to each other, and how the data flow and shared in this system. And now when you learn accounting, you will have a better understanding where all of our accounting data come from, and what type of reports we need to prepare, what type of data or information we can respond to the different users. So that's a way the accounting function can benefit the overall business operations. And this is a typical manufacturing industry, and you can adjust it to other sectors, right? Like maybe the companies you are working or you used to work. You may have a service industry, transportation companies, healthcare organizations, like the rental car companies, right? So because in this textbook, normally in the managerial accounting textbook, we majorly focus on introducing cost concepts, cost reports, or different analysis using manufacturing industry as the main examples. But we can easily apply the concept and the principles to other industries as well. And then the next slide is a more detailed structure of the financial accounting setup in the SAP system. And under financial accounting, we have balance sheet account, right? The balance sheet account will help you capture all of the data affecting your assets, liabilities, and shareholders' equity if you are a public company. So balance sheet accounts. And in SAP, for income statement is called profit and loss. So another word for income. Because even we call income, it might be positive or negative. So profit or loss statement, they have different financial accounts under the income statement. different type of revenues, cost of goods sold, and all of your selling element and general expenses. So the transaction data is captured by the financial accounting system initially stored on the different ledger accounts. And then periodically, the accountants or the system will automatically summarize the balance from different accounts and prepare the external financial statements. We also have subledgers. Subledgers normally refers to accounts receivables and accounts payables because we have multiple, right? So you do business with multiple customers and your procurement deals with different vendors. In addition to general accounts receivable and payables, we also have subledgers to especially track the transactions for each individual customer or vendor. Okay, so we can reconcile the total receivable balance with the subledger receivables or the total accounts payable with the individual accounts payables. And for managerial accounting is kind of more complex under the SAP because we all know the financial accounting, they have structured or principle-based financial statements. But for managerial accounting system or for controlling purpose, each company, they have their different approach. And based upon industry sector or the size or the technology you adopted, so you may have different approach to implement the managerial accounting system. In SAP, for a typical manufacturing industry, they use cost element accounting. So under controlling, the cost element accounting is the main system or the approach under SAP to help the company manage, report their different cost categories. So in another word, to implement the cost management. Under the cost element accounting, you can see under the income statement accounts, right, like the cost expenses affecting the profit and loss, they separate into the grid area means the product cost. Remember, so if you already started on chapter 2. So the gray area means the categories under the product cost or manufacture cost. So it means those other cost items directly affecting the product cost or service cost, including your direct material, direct labor, and all sorts of overhead cost. And then the non-operating expenses, non-manufacturing expense, or period cost. Those will be captured by that's beyond the gray. So it normally can be handled by the financial accounting system. So we don't need a separate focus or separate approach to track and control the period cost. So those costs, remember, they directly deduct from your sales revenue or service revenue for the total amount in the income statement. But inside the manufacturer or product category, they even further separate into primary cost and secondary cost. Primary cost are defined by SAP are the cost items, so cost by external business events, such as buying material from vendors, so paying labor expenses to employees, or paying the utility expense for your manufacturing industries, or insurance expenses, property tax for the manufacturing facilities. So when those expenses happen, it will be captured by the primary cost accounts. Then we also have cost items incurred because of the internal service provided and offered, right? For example, the service offered by our own IT department or repairment, right? So we have repairment service internally to all of the other departments, or even think about your cafeteria cost, right? So consumed by the manufacturer staff. So those are called secondary cost. So cost charged by other internal cost objects. And for these, we need allocations to the cost. So allocations are settled to the final cost objects that receive the services. For example, the cafeteria cost, right? They wouldn't be sitting in the cafeteria department. They needed to be allocated to the employee or departments finally consume the services. So depending on the functionality of the employees, so it can go to the like a manufacturer, like direct, it can be direct labor related, indirect labor related, or like even can goes to the sales or other management teams. So depending on who receive the services. So I'm not really going further on this, but these are uh, you can see the application of the cost management is really case by case or depending on uh, your industry, the size of the company, and also in this days, the technology system. So this is the way SAP do it because I use SAP a lot, so I understand SAP better. But if you use Oracle or other type of ERP system for a company or a business, they may have a different approach for the managerial accounting function. Okay, just keep in mind. And then finally, I'm getting to the cost classification we introduced in chapter 2. For cost management, the first, we need to understand without a correct understanding of the cost and the cost behavior, it's impossible to do the right cost management. So that's all you can see for all of managerial accounting or even cost management. The textbook or like articles will all start to introduce the way different ways we classify the cost. I think the main takeaway I want to focus, and this is a sentence I copied from the textbook. Different costs for different purposes, because it seems to be a little bit overwhelming, right? So especially if you haven't really touched upon managerial accounting or the cost concepts, they introduced uh, more than 5 or 6 different ways we can classify the cost. I I have more detailed explanation in the video I already recorded, so there is no confliction. Okay, means when you use one approach to classify the cost, doesn't mean you cannot add the other approach. So it's really based upon the your situations. Okay, what type of decision you are trying to make and all your business circumstances. So what type of decision scenarios or analyzing situations. So we may apply the different cost categories based upon our like the needs from the management. So really, rather than trying to memorize or, really to apply it more flexible to the different company settings. And then even you try to apply to the company you are working on, be flexible, right? So, if I'm not a manufacturer industry, then probably it doesn't make much sense. You talk about a manufacturer cost or non-manufacturer cost, all product cost and the period cost, right? So when we talk about the manufacturer cost and the non-manufacturer cost, your focus is normally on the income statement, the external income statement we offered to the users, because the cost of goods sold, the item before the gross margin, we have the cost of goods sold is referring to the product cost. So it means we are trying to capture the real cost, like the direct cost to make the products or provide the service. Okay, that's normally the direct material, direct labor, and the general manufacture overhead. So we don't want to add selling expenses or management expense to the cost of the product because it may give you misleading information about the true cost of my product, right? Like the computers, the cell phones, the refrigerators, the aircrafts. All of the managers, they want to have a correct understanding what's the true cost of their products, right? They can make better pricing strategies or cost reduction for making the products. And then in comparison, the period cost are the supporting expenses, even they are not related to make the products directly, but they are necessary for the company to organize the sales, right? So support all of the personnel, have the accounting functions, and even research and development is categorized under the period cost and is deducted in the income statement after the gross margin. So when you try to analyze the margin, different margin information for income statement, we need to have a correct step-by-step income statement. So we need to put the cost in the right position in the income statement. So that's for manufacturer, this normally I call cost classification from the functionality perspective. Then the other important classification we'll use more later in CVP analysis after chapter 6 is the cost behavior analysis. So cost behavior. The cost behavior we are talking about is when you identify the cost driver, right? This is especially important if you want to do cost reduction, more efficient on your cost management. I want to understand why I have this type, this many different type of cost in the company. And what other factors drive the cost incurred? So the cost behavior means we want to understand when the cost driver, you identify the change, right? So increase or decrease, like the volume of the products or the number of the product parts or the hours of your running the machineries, right? Or the number of the customers. So when this cost driver increase or decrease, how the cost, like the numerical value of the cost will react to the cost driver. So they will change accordingly, or they will remain the same, or they will change but not linear, right? So if they change, is a linear relationship or is zigzagged or is kind of, or maybe a deferred or a curved line. So the cost behavior is key or critical for internal management. Internal management to understand and trying to do cost reduction and cost management. So based upon the cost behavior you identified, we may have multiple, like, sometimes you can cost driver. There are lots of cost drivers in a business. So you need to find a reasonable number. You cannot really have maybe 100, right? That's too much. So we need to reduce it to a reasonable number of cost drivers or cost pools so we can analyze practically the cost data, okay, rather than spreading too much on the cost drivers. And this part we'll talk more when we go over the ABC, so activity-based costing in chapter 5. So we have variable cost, fixed cost, and mixed cost. Okay, I want you, because we have the smart book reading, uh, I really want you to, I think, let me check what the number. I was reading the ebook, okay, before recording this video. So I want you, that's page 52, sorry, like page 42 of the ebook. Really pay attention, when you read carefully, so the basic cost management concepts, different costs for different purposes. So for that section of the ebook, is written very well. They use the Comet computer company as an example to introduce the cost behavior analysis and then cost management economic cost concepts. They even have a healthcare example to talk about the traditional way, like when we introduce the traditional way we understand healthcare operations, the cost categories are kind of misleading. Normally, people think they have lots of fixed costs for healthcare industries, but actually it can be mixed cost. Okay, for short term or mid term, they are fixed cost. But when you're looking for long term, it's more like a mixed cost. Means the management can change the cost category. Like for example, you can reduce the office space if we reduce the patient's volume reduced. So you can reduce the office space and maybe sublease the actual space or move it to a smaller office. So rather than staying in a large office and incur large amount of overhead cost and even the number of the staff cost. So in long term or mid term is adjustable. Okay, rather than you keep the same number of staff no matter the volume of patients change. So that's all the things like as a manager you can think about, okay, to optimize the cost categories and do better cost management, okay, by analyzing the cost behavior. And the cost behavior also forms our foundation when we're trying to do the cost volume and profit analysis, so cost predictions. And then by the traceability, or when you try to identify the responsibilities or traceability or responsibilities, especially, for example, a cost report for a function or for department, or I want to find out a cost for company like company event, right? Like new employee training or a company picnic. So you have a special cost object. We want to analyze what are the direct costs that can be traced or be responsible or can be charged to that cost object, right? So direct cost. And the indirect cost are the supporting cost to the different other cost objects. Okay, supporting expense, but not directly chargeable to the cost objects. And in service industries, they have lots of, I think their focus is on direct cost and indirect cost. such as the financial services, like a banking industry, right? They don't really have manufacture or non-manufacture. They can have variable, cost behavior, but I think their focus is more on the direct cost and the indirect cost. And finally, we have some other cost classifications case by case for decision making, like sunk cost. So any of the cost in other categories can be sunk cost, means they are not affecting your future decisions, right? So if some cost happens in the past, or passive. Okay, like when you try to dispose a used asset, vehicle or building, it doesn't matter how much you pay initially for the asset. And you don't want to bring the original cost or book value, right? So you just focus on like the way you can dispose. You sell, you sell to you sell it, or you maybe do renovations, right? Like for a used vehicle, do I just want to sell it as it is? Or maybe I want to have some renovate, like maybe fix the car, right? To do more repairment and continue to use it. Or do some repairment and then sell it at a higher price. So you face these different options always in business operations and even in our personal financial situations. So we don't need to you need to ignore the sunk cost. So when you're trying to fix out how much you cost, so cost you initially, that may affect your current decisions, right? So yeah, just to compare the options you have and compare the different benefits or cost, but ignore the original cost. And the opportunity cost is also referring to when you have different options. When you take one option, the sacrifice we made by giving up the other options, right? When you have, so means I don't have all of the resources to do all of the projects I want, or the time, right? So I must pick one from all of the three options. Then if you pick one and the benefits from the other two options become opportunity cost for the adoption or for the adopted ideas. And differential cost is also comparable when you have more than one options. So I'm not really elaborating the details, which we already offered in the other videos. The key point is again, okay, I want you to think about the application of these cost concepts, your own company or some other business you are familiar, and how the learning of the structure of the cost concepts can help you as managers to do a better job, right? To understand the cost of your own department, your overall business better. And you can maybe get some idea or a new perspective to look for your cost management. Okay, I think that's the really important or takeaway we can benefit from the learning.